Hi, and welcome to this week's look back at the major stories to have impacted the market so far. And we're going to start with a commodity. We're going to start with probably the second biggest commodity in the world after oil, and that's gold. And gold price hikes have been attracting some speculation in recent days. Now, the gold price has been increasing rapidly over the last few weeks. In early November, we saw its lowest price for 6 months, around the $1,628 per ounce mark. At the moment, it looks like we're aiming to recapture $1,800 per ounce. Now, there is some surprising volatility for what is effectively a physical store of value and something that's often used as a safety net against central bank policy. Well, what's going on? Well, some analysts and investors are calling basically for a bull run on gold. Others, and there is some pretty wild speculation out there, of $3,000 an ounce in 2023. Wow, I mean, that's a pretty stratospheric number. There are some more conservative views, however, out in the market, and they are that although it's almost $1,800 now, the chance of a move lower is there because the Fed can still surprise on the hawkish side of monetary policy. Trading pretty much flat on the week so far. Obviously, we've seen some pretty big rises, so that's a little bit to be expected, and there has been an awful lot and is still economic data to come out. Unusual to see this sort of volatility in gold. Are speculators jumping on the bandwagon? Nobody seems to be quite sure, but certainly there's some confusion about which way it's going to go next. The second story we're going to take a look at is a little bit more macroeconomic, and we're going to have a look at what the future holds for the Fed. So the Fed, as expected this week, raised interest rates by 0.5%. And obviously after that, as usual, Jerome Powell spoke, and we have some key takeaway points from that. Now, he said that the signs of slowdown inflation do not yet inspire confidence that the battle is won. He also said the Fed will continue to increase interest rates next year, despite the fact the economy is sliding into recession, and that interest rates are going to remain high for possibly up to 2 years. On top of this, he also forecast an increase in the unemployment rate to 4.6%. Now, we have seen obviously inflation slowing in the States, which led certain commentators to believe that there will be a slowdown in the increase of interest rates. But obviously, Jerome Powell clearly there seems to indicate otherwise. The Fed clearly fears that current high inflation may take root. So tight monetary policy has more supporters than opponents currently. Well, what does it actually mean for investors and traders alike? Well, there's clearly an anticipation of a recession and fear of a decline in US stocks, particularly tech stocks at the moment. If we look at the chart, it shows the Nasdaq has declined slightly since the beginning of autumn, while in fact the S&P and the Dow Jones have risen, albeit very slightly. Clear confusion abounds. Clear nobody's quite sure what's going to happen. As I always say, make sure you use your risk management techniques and keep your eyes on the markets. Right, for our third little story, we're going to turn our attention back to the FX markets. And the euro against US dollar gains a bit of bullish momentum this week, whilst dollar Swiss franc has dipped further. We saw the euro start a fresh increase above 1.0550 resistance level against the US dollar. We saw a break above the major contracting triangle on the hourly chart. We saw a high of 106.72 FXOpen. A small downside correction did start just after that, and we're looking at support at the 10600 mark and then 1.0565 with possible resistance at 1.0640. Now, at the same time, if we have a look at the dollar versus the Swiss franc, that started a fresh decline below spot 9350 and spot 9315 support levels. We saw a bearish trend line forming with resistance near spot 9360 on the hourly chart. Certainly seems to be a little bit of easing for the US dollar here. It's been strong all year, but we're starting to see some other currencies gain a bit of strength against it. Keep watching, keep trading. Okay, and finally, we're going to stick to the currency markets, and we're going to have a look at sterling and the fact that GBP has made some remarkable gains so far this week. And it's interesting how perceived good news has a positive impact on sovereign currencies. Now, as we've discussed many times, the pound has spent the tail end of the summer and into autumn plummeting and basically taking a good old-fashioned knock. We saw it go down as far as 118, 1.18 versus the US dollar. But Wednesday saw the pound continuing its comeback, trading at 1.24 against the US dollar. Well, why? The dollar's slightly weaker at the moment, having spent a year holding its strength. And unusually, the dollar is also down despite rapidly decreasing inflation over in the States. We've seen it go from 10% to 7.7%. Now, you would think that is perceived good news, but we mustn't forget that US firms have to do business in other areas of the world, particularly the UK and EU, for example, where inflation is much higher. Now, this, of course, means increased costs to them, also means at the moment increased wages. So I think there's been quite a conservative view taken on the US dollar recently. But the pound's going up against the dollars, despite the fact that inflation in the UK, 10.8%, still over double figures. Interest rates are on the rise too. We've already seen the Fed go up 0.5 percentage point this week. And in fact, in the UK, the same thing's happened today. It's a very interesting dynamic in currencies at the moment. Despite falling inflation and rapidly falling inflation in the States and high inflation in the UK, the pound's doing well. Again, this is something to keep your eye on. This is slightly unusual for us. So volatility abounds. Risk management techniques are going to be key if you're going to get involved in the markets at the moment. There's a lot going on out there. There's lots of opportunities. But as I say, there's a lot of volatility. So be careful, and we wish you luck with your trading week ahead.